German retail giant Metro AG has been in the Indian retail space for over 2 decades but may now be looking to cash out as per news report. Metro is reportedly looking to cash out and is hunting for a buyer. Names like Thailand's CP Group, Reliance Retail, Tata Group, etc. are doing the rounds. But it's important to also understand why Metro wants to check out. Can relatively smaller chains survive in an extremely competitive and tough environment that saw even a future group collapse? To speak more on this, I'm joined now by Harminder Sahni, founder and MD of Wazir Advisors. Harminder, hi, great to have you on the show as always. Your take on the news reports today that Petro Cash and Carry wants to check out.
So, Tamanna, I agree with you. I think one of the major reasons is the intense competition which Indian market has seen, and competition is driven primarily by the huge amount of consolidation which has happened over the last few years. So now this is no more organized retail, which we have seen over the last few years, but a changing landscape completely now, where lots of people came into retail, and after that many failed, and the rest of the other got consolidated. So Metro has been in India for a very long time, but given their stature, their scale, as well as their, I think, the competence of running cash and carry business globally, I think they haven't really tapped the potential fully in India. And they have remained, while they're a good player, but at the same time, they have remained a limited player and now obviously a much smaller player in the overall scheme of things. So I think either they need to pump in a lot of money and take the bull by the horn and say that we are a significant player and we should be considered a competition in the market, and otherwise also. But otherwise, I think I always maintained India is not a place to hang around. Either you have big plans, that's why you jump in here. Otherwise, there's not a place to just hang around because there's no fun in that. You'll only lose money and you'll only burn your fingers.
Harminder, is this just a Metro problem? When it comes to the retail space, we've seen even a future group collapse, and obviously it may have had its other set of issues such as high leverages, etc. Do you think this is also very telling of the kind of deep competition and deep pockets we right now have trying to dominate Indian retail?
Well, absolutely. I think competition is, like I said, is one of the biggest reasons. Consolidation, because if the market is, let's say the large players are driven by consolidation and they are, let's say, merging and becoming larger and larger. So what it leaves you with is starting from the real estate to the talent to the supplier side. Customer comes in the last, because to customer, it doesn't matter whether the best store in their locality belongs to a chain which has 1,000 stores or 5,000 stores or just 20 stores. Like in DMart has shown very clearly that you can be very successful with very small number of stores. Also, nobody cares about your scale at a national or international level. But the point is at your supplier level, real estate, as well as your talent level, I think you struggle, because if you're not a large player, you don't get best of all these things. And then how can you bring in the best products at the best prices and the best service to your customers? So that's what's going on. So the scale is definitely the factor which leads to success or failure in this particular segment like retail. We would say trading business. The volumes, you buy large, you sell very fast, right? You squeeze your vendors, you pay very minimal rentals, you scout for real estate, which is very efficient. And then you have very talented people, the best of the industry, working with you. That's the only way you can either survive and then potentially thrive. And I think that's where they must be feeling challenged. So that's very clearly the domestic reason, even though for Metro, this could be the reason to do with their own global issues, that they have been pulling out of various markets and they may be wanting to consolidate in their home market and not spend their resources in the markets which are as competitive as India and some of the other Asian markets. So that could be another compelling reason for them. But yes, so it's a one way it's a Metro issue that they've chosen to step out, and I'm sure they've thought through it and taken the right call. But otherwise, Indian market, I say the one qualifier very clearly, I repeat it, not a place to hang around. Either have big plans, put in big money, or you just quit the market. That's the only option.
Who do you think will be interested in this? There are a lot of names doing the rounds of prospective buyers. Is it an attractive proposition, an attractive business?
Yeah, I would say again, because see, Tamanna, the whole organized market is still, right. It's a small part of less than 20% of the overall part of the retail market, whether wholesale or consumer retail market. So I think any piece which is there and doing some amount of business, right? Why let it go? Why not consolidate? Larger players would like to consolidate, but then it comes to at the price, right? Because I don't think somebody is going to pay premium for the brand or premium for the anything, but it's just to do with the business and the locations that will they pay for. So what is the replacement cost for it? Somebody will do the maths and then figure it out whether this is the right number or not. But so it's to do with the price, honestly. That's where it will come down to. At the right price, there will be people interested, because now the larger players who are out there and who are moving in it, I'm sure they have figured out their way how to want to grow it and how much to consolidate. Because when you talk about Future Group, I think the brands like Big Bazaar and Future Life Fashion and many other brands which they had definitely have a lot of consumer traction. So there still was there certain reason, certain value in that for a company like Reliance to be interested, other than the large number of stores which they had. But in case of Metro, it's a cash and carry wholesale business, and it's a very, very tight margin business. So if you want to buy the volume, it's not just the volume which you are buying, because the brand name as such is not necessarily something which will carry much value. So I think it will be a deal which can happen, but it will happen at a reasonability of valuation. The price will be the key factor in that.
Thank you so much, Harminder, as always, for joining us on the show and breaking down this big story in the Indian retail space.
Thank you.